I'm Matt Bishar with NAREIT's REIT.com here in Phoenix, Arizona for REITWise 2015, NAREIT's Law, Accounting, and Finance Conference. Joining me is David Slotkin, partner with Morrison Foerster. David, thanks so much for joining us.
Thanks for having me.
Now, can you start by talking about trends that you're seeing regarding shareholder activism in the REIT space?
Sure. Historically, years ago, activism in the REIT space was pretty limited to gadflies like Evelyn Y. Davis or the unions like SEIU, mostly around governance and things of that matter, classified boards. What you're seeing now is that the broader shareholder activism you're seeing in the other industries and larger companies is seeping into the REIT space. So you're seeing a mix of different types of activism. You're seeing a hedge fund activism, like from Jonathan Litt's Land and Building. You're seeing more traditional dedicated investors like CalPERS and CalSTRS bringing shareholder proposals and taking other actions. And then you're seeing what I would call a combination of activism and hostile takeover type activity. Recent examples really being the Corvex Commonwealth situation that took place about a year and a half, 2 years ago, which was really activism turned into taking over the board of the company. Then you saw the Regency open hostile bid for NAREIT, and now you're seeing, or just have seen, the Simon Macerich activity, which you could argue is some form of activism or some form of hostile takeover or a mixture of both.
And picking up on Simon's takeover attempt of Macerich, do you think we're likely to see more of these type of takeover attempts, and what factors drive that activity?
Well, I think it depends. Obviously, a Regency going after an NAREIT is a very different thesis behind it than a Simon going after a Macerich. There's scale issues. Obviously, NAREIT, a sub $1 billion REIT, Macerich, a very large REIT, not a lot of competitors out there who could really step in and try and trump Simon, other than maybe some of the private equity players, as there's been rumors. So I think that, yes, you're going to see more, but again, I'm not sure that this really is hostile takeover territory. I mean, if you look at it, the traditional hostile takeover activity takes it further than either Regency took the NAREIT transaction, or Simon appears at this point in time to be taking the Macerich transaction, having just last night said that their offer is off the table. Now, I'm confident that this is not the entire end of the story, although it could be. But I do think you're going to see a lot of this, and it could be anything from Simon looking to gain further scale. A large company needs to make a large splash to really move the needle. When Regency looked at NAREIT, it was more of a high-class asset, smaller play for a larger company. And I think that the disconnect between potential public and private values right now is going to further drive that kind of activity.
And looking a little more broadly, what do you expect overall in terms of the direction REIT M&A is going to go?
Well, I think you're going to see more of it. I think it's unclear what type. As interest rates start to creep up, as we all expect will start happening middle to end of this year, depending on how quickly the Fed moves the needle, you might see the cost of capital for some of the smaller REITs becoming more expensive, becoming harder for those REITs to raise the capital necessary to gain scale. So you might see some activity in the sort of mid to smaller REIT space. On the other hand, you might also see some activity in the larger space. While interest rates might creep and make it harder for a Blackstone or some other private equity player to get great leverage terms, I still think that you find that you can get greater levered returns in a private market than a public market because of the differences in the amount of leverage a public REIT can carry versus a private REIT.
David, thank you so much for joining us.
Thank you.
For more on this and other REIT news and analysis, be sure to visit REIT.com.